The mergers and acquisition industry is smoking, literally. That's the feeling on Wall Street as British American Tobacco on Friday said it's made a $47 billion takeover offer for the roughly 58% of American peer Reynolds American that it doesn't already own. It's a move that would cement the two cigarette giants' long-standing transatlantic ties and create the world's largest listed tobacco company by revenue and market share. Here are 5 things to know about the proposed transaction. First, a little background on the two companies. British American Tobacco is currently the world's #2 publicly traded tobacco company by volume behind Philip Morris International, and it owns brands including Dunhill, Lucky Strike, and Pall Mall. Meanwhile, Reynolds is the world's #6 cigarette maker by volume and owns Camel and Newport. The BAT offer follows a wave of consolidation in the industry. It comes at a moment of transition for Reynolds, which said earlier this week that its CEO, Susan Cameron, would step down next year. The North Carolina-based company has struggled with declining tobacco volumes as well as slowing sales of e-cigarettes. And the companies are already connected. British American Tobacco already owns 42.2% of Reynolds and is offering cash and stock worth $56.50 a share for the rest of the company, representing a 20% premium to Reynolds' closing share price on Thursday. The company said it didn't have discussions with Reynolds management before going directly to Reynolds' board, which will now evaluate the offer and respond. The deal will boost British American's tobacco market share in the U.S., where it currently holds 5.3% market share, while Reynolds holds 31.3%. The company would be the world's largest by operating profit in both tobacco and so-called next-generation products, such as e-cigarettes. It would have a major footprint across markets such as the U.S. and Western Europe, as well as several emerging markets. And finally, the deal isn't likely to face the sort of deep antitrust hurdles typical of such deals, since the UK company has been a shareholder in Reynolds since Reynolds was created in 2004, and that stake counts for a hefty chunk of BAT's profits.